G'day traders, I'm Greg McKenna. Welcome to Markets Morning for the last day in October. October 31, Samhain if you're Celtic, Halloween if you are not. I'm McKenna, so of course I think it's Samhain. Anyway, interesting night last night. In many ways, the rally we had to have. Oh, now, just a quick bit of editorial warning here. I'm in a bad mood today. I don't know why. I normally listen to dance music to put me in flow all day. Today, I'm listening to Disturbed and Nickelback and Skillet and all those other kind of much heavier kind of things. So if I'm a bit more clipped than normal, I do apologise. Anyway, so we had the rally we had to have. We had the S&P hit that 38.2% retracement level I talked about yesterday. We had a bounce again overnight, and that really has lifted folks' eyes. It was a good rally. The S&P finished up about 1.6% at 2682. My sense is it can maybe get into the sort of 2730s or somewhere like that. We had the Dow up 1.7. We had the Nasdaq up 1.43. We'll see how that goes tomorrow given Facebook's earnings. Europe wasn't so good, but Europe had terrible data. It's no surprise that the dollar index is at 97 again. It's no surprise that Euro is down at 113.40. It's no surprise that Sterling is just clinging to 127 and not far away from my target of 126. Europe's data was terrible, but the worst possible thing happened. German inflation was actually higher. Now, we've got a single mandate central bank in the ECB. If inflation's rising, they must act. So, lots of people like to talk about growth when it comes to the ECB, but the ECB has a single mandate. It's inflation. QE must end because inflation is starting to rise. Rates must rise if inflation does stay elevated or at least stay at the 2% region. So that's going to be the interesting move over the next 12 months. 2 minutes already, I better get the skates on. Gold was down, silver was down. Stocks up's not good for them. Aussie's up, stocks up's good for that. Copper's down, don't quite understand that move except on a purely technical basis, and 255's my target now. Bitcoin's not doing much. US 10s are rising, US 2s are rising, and that's one of the issues you've got coming into non-farms this week with the rates starting to rise if stocks are curing themselves. We'll have to wait and see. Anyway, let's dive straight into the chart. And I'll kick off with stocks again. So here we got the S&P 500 daily. Recall yesterday that low was about 8 points above the 38.2% retracement of the broader rally. So what do we got now? Now, in the Markets Morning, the written piece, I've talked a lot, 3 different sections about the 38.2% retracement level. 38.2% retracement level, those who have been reading my stuff and watching my stuff know I always say is just a garden variety move. Now, why is it a garden variety move? Because we see them all the time. You know, you go from A to B and you come back to, 38.2% of that move. Whether it's up or down, you see that all the time. And one of the reasons for that is that there's two types of consolidations. One's a time consolidation, like we saw in Euro earlier this year where it traded that range and it went nowhere. One's a price consolidation where you see a move back to the 38.2, sometimes the 50%, sometimes even the 61.8, but mostly between the 38.2 and the 50 if the move is going to extend once more. And that's the risk for Euro. But for stocks, what do we got? You could argue on a macro basis from an S&P point of view that the move to the 38.2 is just the pause that refreshes. I'm not sure it's finished. That was the 38.2 of the Trump rally. There's obviously the much longer 2009 to 2018 rally. We'll see. But for the moment, my sense is that a run towards 27.19 to 27.34 is possible. How it looks then, if we get another up day, the MACD is going to turn, which normally gives me a bit of an impulse. Now, the MACD is just really the two moving averages coming together, isn't it? So we'll keep an eye on that one. I'll go through stocks while we keep going. In terms of the Nasdaq, so the Nasdaq, similar story. Oh, you'll notice my charts are different. I went through and I changed the template on all of my charts. So a lot of those lines that have been there are now gone. What have we got? We've got fractals for important support and resistance levels. We've got the Jimmy R, which is the 15 and the 30 exponential moving averages. If it's a daily, it's a daily. If it's a weekly, it's weekly. If it's a monthly, it's monthly. All right. Then we've also got the 200 day moving average. Not because I put that much stock in it, as you know, but because everyone else looks at it, so I've got to look at it. That's part of the theory of trend lines, right? Then I've got the MACD as usual. The blue line here is the RSI, which I've thrown in to the stochastics. I'm not a big RSI fan, but I want to keep an eye on it. I know a lot of people use it. I prefer the stochastics, to be honest with you. And then volume. I've you know, as an old futures trader, that's where I learnt how to trade. I learned how to trade by managing money, managing a book at a bank, and having a futures account. And one of the beautiful things about futures is they come with volume and they come with open interest. That's our most powerful combination if you're trading. So I can't get open interest for foreign exchange, and I can't really get open interest from a CFD provider such as we use here, but at least we can get volume. So we can see that the volume did spike. Anyway, the Nasdaq is still clearly in a downtrend. The Jimmy R is pointing down. That was a bit of a long-winded way of looking at it. But if we have a look at that, what would we be saying? We're going to say that, right? So we would say, or I would say, a move back to 7,000, 7,020 is possible. And if 6,587 breaks, on the downside, I'm looking for 6,155 as a pure Fibonacci extension of that move. If I have a look at the Aussie market, we've actually done really well. You know, we've had we made that low Friday, and that low Friday, if I shrink this chart down, I know it's going to get messy for a sec, but look at that spike low, volume spike. Look at that low, volume spike. Look at that low, volume spike. Look at that low, volume spike. And a volume spike continued into the recovery. That tells me that the buyers are genuinely there, and obviously, you know, blind Freddy can see that candle. So where are we now? We're right at resistance. Last night's high was 57.85. Now, recall, I think I said 57.30 was where I thought it'd get to. It got there, then it pulled back, and then 57.30 to 57.80 were the two levels. Now, here's why. If it can close above 68, right, as this level here, I said 80, but let's call it 68 to 80, something like that, then it can run. And it can run to 58.79. That would be just a plain old 38.2. But remember the chart I used in Markets Morning last week? 1, 2, 3, 4, 5. So it's a good spot for you know, a bit of a pullback. So we'll see how it goes at 58. And of course, I'm not an Elliott Wave guy. But, you know, when they pop up like that, I've always learned that when they pop up like that and anybody can see them, people are going to be looking at them. Again, it's kind of a behavioural approach to technicals, isn't it? You know, I'm not wedded to anything mystical about technicals, although my 15 and 30 period EMAs does have some sort of mysticism in it, and thanks to Jimmy Rohrback. Anyway, 8 minutes, I'll get going. Anyway, so we could get back to 58.79 and still be in a downtrend. How it looks up there will be important. Just quickly on the DAX, and I haven't even looked at this chart today, besides to update it. You can see here, let's just put a trend line in. We'll go from there, across there. Trying to break out. 11.7 is still the key. So remember, here's our gap here, right? We had that day last week. So if you get back above 11.5, call it. You can run to 11.7, 11.8, and then we'll see how it looks. Everything's predicated on what the US does, obviously. Let's move to foreign exchange. We'll have a look at the euro. Euro looking like it's under pressure. Look at this. You know, this downtrend, Jimmy R, the break. So this is so many charts. You know, an initial move, a move back to between the 38.2 and the 50%, and then a break of the low gives you a projection. It's subtly out. I've been saying 112.80, 112.77, it's the same thing. A break of 112.80 opens 108, folks, and potentially 104 in time. It's got a break, though, and we've got non-farm payrolls, but that's the target at the moment, 112.80. Sterling, I'll come back to dollar yen in a minute. Sterling is rolling. This is the weekly sterling. This is the chart that I used in Markets Morning today. If you have a look at it on the dailies, you know, full round trips. You know I love full round trips. The other thing I love, but look at this, look at this, look at this. What have you got again? You've got a move. You've got a retracement to the 38.2. It can't make it. It's coming back to retest the low. If that low breaks, 120, 1.200 is what I'm looking for. 120. Now, that is obviously a hard Brexit. But what have we had? We've had Fitch say that they're not sure that the UK is actually going to get a deal done and it's not going to crash out. We had S&P say last night that they still think that a deal will be done, but the chances of a hard Brexit have grown, and that would be a credit negative. They've also said if that happens, you get 5.5% off GDP over the next 3 years. What's the Bank of England going to do? It's not going to hike rates, which is really kind of disappointing that the politicians are screwing up this. But anyway, 126.60 has been my target for a while. Back from, remember when I said if 129.90 broke, and then 120 is the number to watch. Dollar yen could be on its way to 114.75, folks. That's up here. So all that blue stuff's gone off this chart now that I used. What have we got here? So if I just shrink that down for a bit, you can get a bit better perspective. You've got this continuation of these moves. Now, that was pretty steep. You know what I think about steep moves. Steep moves up and steep moves down, which is where we've got stocks at the moment, are always a warning that prices move too fast. Now, you could use your Bollinger Bands as your way to judge whether things have gone too far, too fast, and those kind of things. And they do work, but the problem is when you get a volatility expansion, the bollies have to catch up, because the bollies are measuring experienced volatility or experienced price moves, and the steepness tells you in terms, or adds to that, I would say. So anyway, so we had this steep move, we've come back. Now we found support. Where are we now? We've broken this fractal here, which is at 112.88. We're at 113.10. So what does that do to me? If we go down to the 4 hours, all right, and we'll just do a little bit of a Fibbo here. The mystical Fibbos, as you might want to call it. Right, that to me suggests 114.55. 114.55 to 75 is, now that's getting steep too on the 4 hours, so we might get a bit of a pullback, but if stocks stay bid, dollar yen is likely to go higher. In terms of the battler, the Aussie, it's done well. I'll go down to 4 hours so you can get a sense of it. Actually, essentially what I've said in my daily today, in the markets morning, is all the bad news is baked into the cake. And I think I've said since last week, if the US dollar takes its foot off the Aussie can rally. Now, clearly, at 97, at 113.40, at 127, the US dollar has not taken its foot off the Aussie. But the Aussie was the best performing G10 currency last night, and there is support coming in. And the reason I think, notwithstanding copper slipping, is a lot is baked into the cake. At 71 cents, it might be slightly overdone for the moment. And certainly with CPI coming up, we could get absolutely obliterated. The market is looking in terms of CPI of 0.4 and 1.9. So that's still below the 2 to 3% range. Trimmed mean is 0. Actually, they're all 0.4 and 1.9. So there's not a lot of excitement there. Any deviation from that will knock the Aussie. If we've got a 0.5 or a 0.6, then the Aussie can run. If it gets through 71.20, it's 71.50, If it gets through there, we could be 73, 74. Not too far away. Pardon me. If we drill down to that, that's bullish engulfing. I just wanted to point that out. You can probably tell I took the short that I had off at 71.80 yesterday. I think it was. It just felt like it wanted to rally. And all the bad news is priced in. Where's dollar CAD? Everything's moved a bit. Dollar CAD. I've lost my dollar CAD. Excuse me, folks. I'm just going to put you on hold for a sec. And he's back. Blind Freddy. Right, so what have we got? Again, I've taken off everything. So let's put it back. You can see it's trying to climb out. Hasn't quite made it yet. You can put it there if you want. This is the uptrend that we're going to respect, so we'll put that line back too. It's often good, folks, and I do this a lot. 14.5. Gee, I better get skates on. I do this a lot. Take all the lines off and start again. Just say, look, I'm pretty comfortable that that's a downtrend, that's the uptrend. I need to see it through last week's high, which is 131.58, I think. 131.58. So I'm going to call it, I think I called it 131.70 or something yesterday. It's got to get up through there to really get a wriggle on. Dollar Sing is up too. It's climbing still. And of course, pardon me, dollar yuan still eking higher. 7's not that far away. It's 2/5 is not very much, but it's important political number. There's every chance the Chinese hold it below 7 until President Xi and President Trump meet. I know I'm only 0.5% away, so as a bloke that reckons it's going to 7.15 or 7.20, it seems stupid to say that, but just the politics. Politics is really important right now. Let's quickly go through gold, silver, copper. Right, rolling over. Failure in the in this region up here. As I suggested yesterday, it's going to pull back. I think 12.17. If 12.17 breaks, then I'm probably looking for 12.05 to 12.10. Silver, and you'll notice I'm talking more about silver. So silver had that big ding-ding, pinball move yesterday. Then it tried to break lower and just holding in at the moment. So they're both under pressure. Both precious metals are under pressure if stocks continue to rally. Now, I know that's a big if, and I know that it's conditional on that. You also know that medium term, I actually think stocks go a little bit lower. But we'll see. Right, copper rolling over, as I suggested yesterday. We're now clearly broken down through the range. Remember yesterday I said 276, no, 273, because Reuters was wrong. That then 270.71 broke, and we've seen this move down by 2.5 to 3 cents. It looks like it's going to 255. This is just like sterling when you think about it. We've had a move, we stalled at the 38.2. Now we're rolling over. So that's pretty much all I can say on that one. In terms of oil, we had a massive build in API, yet oil rallied after the API build, which makes no sense. But one thing that I did want to say was perhaps I had my 64.40, which is here, which I drew that, as a full round trip. Maybe that's wrong. Maybe it's 1, 2, and there's a third line here. That's certainly how the market traded a night back or last night with the low just around that. And that fits with these two highs as well. So I think a few oil traders have drawn that channel in. So that's the level to watch. 65 sort of 50, 70. A break of that gets you 64, 40. A break of that gets you $60. So what happened in oil? Fundamentally, OPEC's so worried, according to sources, that they're thinking of cutting off some supply. But don't forget, the Russians said they're not going to do that. What have we got here? Similar sort of story. We've got this uptrend. So what have we got? We've got support here at 74.38. We'll call it 74.25. A break of that, and you're going to get a run down towards sort of 71.70. That fractal's important, 70.28. That's a full round trip from that. So that's where I'd be looking. And, you can see the trend line if it breaks higher. That's pretty much it, except quickly for Bitcoin. Where is Bitcoin? I've lost Bitcoin. I think that's the messy Bitcoin chart. Looks like some sort of cruiser out of Star Wars, doesn't it? Oh, sorry, show my age there. Basically going nowhere still. That's my long one. I didn't change that one because I wanted to keep that one, but I can't find the other one. Oh, there it is. Nope, that's not it. Righto. Sorry about that, folks. That'll do me for today. Watch, big day. CPI, NBS, PMIs, Bank of Japan, German retail sales, Canadian monthly GDP. The week starts now, folks. It's huge. It's huge. It's huge. It's huge from here until non-farm payrolls on Friday. So keep your wits about you. I'm not trading today. I'm in a bad mood. I'm going. So I hope you have a better one than I'm going to have. But I'm going to get in the water, so that'll be nice. I'll be sorted out pretty soon. Bye for now.